Good morning, everybody. Oh, market's jiggling around a little bit on another report and another conversation about the Fed and interest rates and all that. Anyway, what are the charts telling us? Well, the 5 minute chart obviously is negative with this big down move. We'll see what the futures look like. But where is it within the range here? Well, let's back up a little bit. Two things. The trend is up. Trend is up. That could change. Uh, the spiders here are retesting this wide range bar. They did exceed it on a closing basis. Yesterday, we covered the fact that the majority of other indices sectors did not move up in this way. But that's been kind of the case for a while, where the breadth has been anemic, but, markets move up, certain stocks moving up, basically AI stocks and NVIDIA, which maybe NVIDIA has seen a high in the short term, especially with the split coming, but eventually, just based on it being an institutional favorite, whatever it corrects, they'll come by it again. So prices were a little bit lower, with a gapping down in the middle of the green bar. And yesterday we spoke about wider range green bars. We want to see them close in the upper half. They can dip down below. We'll see if it comes back up or not. This area, this line right here is, cutting through the middle of all these closing prices, 530. So that should be support, give or take. If it continues to go down there, it's not that far away. And at the end of the day today, right, looking at the weekly chart, what does this bar look like? Right now, all prices are in the upper part of that range. It's still a green bar. So, we got to put the short term in perspective of the higher time frames, put that in perspective, from a day trading point of view. Yeah, this is starting a move down. The hourly chart, it's going to gap down below that bottoming tail bar. So short term, a negative, but still in an uptrend. And we've got this large support area down here, 530, what we call minor support. It's beyond what's directly to the left. So we do have a void, this momentum move higher. And so we'll see where it stops. We're not. But coming down into this area, we assume that there are going to be buyers down here. And we'll see if they step up, if they're ready to buy the dip. And whether this news today is basically irrelevant, just, from the point of view of do they buy the dip and take it back higher again? So we'll see. Take a peek at the internals, looked at a little bit. So you can see the breadth. So when we look at a whole bunch of different ETF sectors, which we did yesterday pre-market, and we saw so many of them are very far from what the Qs and spiders are. And you can see it's below the zero line. And I think it was in the green room, we did a little explanation of this. Well, all this is this breadth internal. If you look at the advancers minus decliners, what you can look at here, right? You take this raw number. It's essentially or the same as an MACD indicator, 19 exponential, 39 exponential. What's the difference between the two moving averages? That's this line. And if the shorter is below the longer, it's below zero, and vice versa. So it's a pretty good way of looking at the broader markets. It's worked quite well when combined with sentiment on a very long-term basis, as far as how I've used that, for a couple of decades at least, if not longer. So sentiment is neutral. This is neutral. What does that tell us? It's neutral. It doesn't give us any heads up as far as both of them being at an extreme. And so while, depending on where this closes, there's, kind of gas in the tank to go lower, but the trend is up. So do buyers come back in and buy the dip and push it up, which would then suggest a move up to 540 maybe next week. We'll see. We got to see where today ends. All right. SPX is moving around a lot, like I should say the options are, like they typically do. This is where they were earlier, and most times as when the market opens, I think it'll go down a bit. So if we can get premium down at this level, I think it's going to be a no-brainer. Um, you know, opening up, say down here, I can go back and look at SPY, but you can just kind of look at SPY, see where it is in alignment with that chart, and then apply the same thing to SPX. And so to get all the way down here today, I think it's unlikely, and that's all credit spreads are. I think it's unlikely it'll go down here, or I think it's unlikely it'll go up there. Now, if they buy the dip, could it get back up there today? I think it's less likely. Um, so again, we'll see. We're far enough away from where the open is. Now, this number came down. I should say it came up as prices came up, and this went up as I looked at 53.80. So not that much up above here. So they move a lot, but you wait, whatever time you're comfortable with to let things rattle around in the morning. So if prices move lower at the open, there should be enough premium at 52.50 again, which when I looked earlier this morning, it was fine. It was closer to just under $1. Right now it's 30 cents by 40 cents. So to get say 80 cents by 90 cents, you got to go to 52.70, which still isn't bad. I think anything that we can get somewhere below yesterday's low or 2 days ago low, the wide range bar and the 20 MA should be sufficient to be far enough away. And that's, of course, without knowing the future, what's going to happen, because none of us do. So looking at that level and on the weekly chart, it would be under this week's opening price, which clearly would be negative. It would turn the weekly bar red, and that wouldn't change the trend. And so does it maintain, say, this area here where it's just, again, chopping around within this range, which is what it's been. So we're kind of, trend is up, but erratic price action. We'll just have to get more data. Qs coming out for the low there. And there was the reaction to the report, the weekly new high. Where is it at on the weekly time frame right now? In the upper half of that green bar, you can see where the cursor is on the daily time frame. It's like, okay, we got a jiggle, but from a higher time frame perspective, it's really no big deal. And stay in the upper half of that range. Definitely would be good if it stayed above the opening price of there, somewhere, rattling around in here. You've got to look at semiconductors, which are being driven by, of course, NVIDIA and others. So that came down quite a bit. Right now, you can see below yesterday's low, give or take. Hourly trend is up, daily trend is up, weekly trend is up, and the 5-minute chart is rattling around. Use the 15-minute, just chopping there, and will open up, if it's in this area, down by all of these pivots. So from an intraday point of view, that's a significant support area, so that if it breaks that, clearly the Qs are going to go lower. And it always raises the question, well, lower to where? And there really isn't much of anything to stop it at that point. And that would be something to keep an eye on or set an alert that if it starts breaking below here, that's one measure to suggest, the broader markets are going to start pulling back too, since this has been a driving force for the broader markets. Looking at the futures and Qs, not a big deal. But from an intraday perspective, kind of a big deal. Sideways in a big, nasty, wide bar. Is it going to follow through? We'll see. But from a weekly and daily chart perspective, it's just a little rattling around. S&Ps, Same story. It did pop above the high and it's coming back in again. We're just going to have to get more data to see from these higher time frames how things are going to shake out. There's the middle of the wide range bar trend, 20's up. Here's the 50 and so on. The weekly chart is just chopping sideways here. And so what we're going to be eyeing is, how far down does this weekly time frame today turn into a topping tail bar, or is it just another, consolidation near this high, and then we go into next week, knowing what we have, which is just some choppy price action over the last, 2 weeks or so. The Dow obviously underperforming at a declining 50, which would suggest it'll pull back. The weekly chart is sideways. So there's one measure of underperformance going nowhere. The Russell is breaking below this pivot at the moment. It's the weaker. So that leads us to what is oil doing, what are biotechs doing, regional banks. I saw in the ticker on CNBC this morning, Moody's downgraded some regional banks. So that's going to be one, besides just the broader markets, that's one influence on this particular sector that could help push it lower. And if this goes lower, and if just banks going lower, that's not positive for the broader markets. And that rattled the markets earlier this year. It's gapping below there, but no significant damage done for the moment. Maybe some individual banks that they downgraded will look worse than that, but this is just in a trading range. Not much going on from a longer term perspective. And Bitcoin, that's moving up. That's good. Closing above this area here. It's chopping back and forth. It came in with the broader markets too. But things are going to be messy here. But block and coin, this is at a higher level. So that supports that. MSTR hasn't been able to get out of its own way. It's an okay pattern, but it just can't get going. And, the typical suspects there. Gold moving down a bit. Big, nasty, wide bar. I'm sure silver must be going down too. So those look like they're still in corrective mode after their move up. Let's take a look at XLF. Yeah, still just trading within the prior ranges. It really doesn't tell us much other than indecision. Whatever's happening in the short term here, from a higher time frame point of view, it's really not that big of a deal until we see it becomes a big deal. And you don't see that yet. Transports, we don't get pre-market data, but it's just rattling it around. We got this big rounding top here. Do they break down? Buyers stepped up at that prior pivot low, and there's nothing going on here. And look at semis interest rates. They're going up here a little bit. It's just been a seesaw here. But one of our concepts, which, look, here's the thing here, right? Strength, greater than 100% retracement. When we see that, it suggests a slowing in momentum. It doesn't mean it's going to turn up like that. This is just based on a news reaction. But what that tells us is after a greater than 100% retracement, there's likely to be a stall in the momentum. And it's really just common sense because it's gone from here to here. It breaks support, takes out some stops, and then we get that slowing. Now, what's happening here? I mean, if this stays up like that, of course, this is leading toward the same story we've been dealing with. What's the Fed going to do? What's interest rates going to do? We're going to have recession, blah, blah, blah. But look at what's happening on the weekly chart. So yesterday and the day before, as this was breaking down this week, and as I'm speaking to give you additional tips, is that, look, whatever time frame you're trading, whatever it looks like, we don't really know what it's going to close like. So yesterday I was saying this looks like could be a measured move lower because this was a big red bar. But here, a day later, it's turning into a bottoming tail bar. So if this was to close like this or a little higher, then we got this break. This is in an uptrend and another bottoming tail bar, which suggests it's going to go up after it deals with the uncertainty of this breakdown. In other words, whatever it's kind of another schizo kind of pattern of indecision. And what does it do here? I don't know. It just take us into next week to see where it develops because as we look at these patterns, there's nothing in alignment that would tell us to take any action. And we kind of looked at that. You can see the dollar must be up because all these currencies are red. So that's another negative for the markets. And so we start off with a negative opening in the contrast of higher time frames being still positive, and we'll see how it shakes out by the end of the day. That's enough. Well, here's Dan. Would you comment, please, on Greg XLU forming a double top? I don't know. Take a look. Well, with interest rates going up, this whole thing with XLU and utilities, and it probably is it is a double top. Is it confirmed by breaking below this pivot low? So you got to pivot, you got to retest, it's pulling back deep. So utilities typically trade in alignment with interest rates because utilities are high interest rate instruments. So if you can buy a utility when other instruments say, 3-month yield on whatever is lower, and this is more attractive, and you can get appreciation if the prices go up. And of course, whatever the yield you get, if the prices go down, it's not going to, it offsets it a little bit what you're going to lose on principal by getting the yield. But, this is the risk with buying this. But this is being driven now by, the AI theme of more energy being needed. So utility companies are making more money and so on. But is this a double top? It definitely retested that. And now, is it going to break that low and start heading down to the 50 MA? There you go. With patterns double top, does it matter how symmetrical they are? I don't think so. Look, as you start getting into symmetry, which there can be, but it's not a reason to take a trade. Whereas if you have a resistance area, you know where to put your stop. So once you have enough information to assess the probability of where prices are likely to go and where your stop loss is, you can then share size accordingly to place the trade. So this whole thing with these different indicators and symmetry and so on, it's freaking brain damage because it makes you look for perfection. And sometimes you find perfection, but to try and find perfection all the time, it's just, kind of deceiving yourself into indecision, so your real decision is what's the probability and how much am I willing to risk? You, Dan.
All right, good morning. Yeah, happy Friday. So here at DPZ, I was just set a new alarm, 518, a little buy setup. Let's see. Go right to earnings here. There's not many. IoT. So this is when we actually did a put spread, the 29.28. So it's a gap against us, but there's 95% confidence we're going to have an open gain at the open, despite this big old gap against us. So I sent a telegram, moved up 30-minute low, tighter break even. Greg, I switched charts. Let me try it again. All right, there it goes. Yeah, got caught up. Thanks. All right, so yeah, this is when I was just talking about IoT gapping against us, but we have the 29s. So we should be in good shape. And that's the only one we did. Daku, 15, ugly gap. I don't have a bias. Breeze, big old gap up, 41, but no pattern. Papa Lima, garbage. Bear 123. Napa, no pattern. Mountain 176, bearish gap. Look at the monthly has room to fall. So let's watch that on a bounce. Zoom Z opening flattish. That ain't bad. I I set an alarm at 1940. We'll see if it can churn its way back up. This is garbage, and that's it. Greg mentioned KRE, regional banks. So I just Googled the ones that got downgraded here to see if we can get any trade key here. UMBF. This one's not open yet. ASB, Valley. That looks horrible. That's the worst one. Downtrend, daily, weekly, monthly. That's set, 30-minute low. Valley Bank. You know what? I think I used to have a CD there. I better check that. I might want to get it out if I still do. No, this one, no volume. All right, DPZ, I just mentioned. PCAR. PCAR, I set an alarm 109.50. That's a beautiful 123. I talked about this the other day of either being a bear 123 or over the red bar, a bottoming pattern. And I love trading charts like that. Well, I love trading compelling patterns, but when I see them, I'm like, hey, here's a pattern. We can trade either direction. We don't care which way. Let the market tell us. NVIDIA, some guy was on Fox Business. It's just, it always is mind-boggling to me how people can assert such confidence in an uncertain science. So the other day, some guy said, yep, Bitcoin will go to 150,000 by the end of the year. Will you bet your life on it? So this guy came out and said, NVIDIA will rise 25% more this year. Okay, that's a bias. I think it's a retarded place to make a claim like that. It's a Climo. As soon as it started selling off yesterday morning, Greg and I immediately went to see if we could sell a 1 DTE bear call credit spread. And it was, all when you get all the levels jacked, you can't get a good net premium. That's what I'm saying, FT. That's what I just said. But you can't get a good net premium. All right, GME. Official earnings are next week, so they must have had some pre-announcement or whatever, which is why it's down here. But today's Friday. Wednesday morning, pre-market, I mentioned that this is a potent turn, and I did not keep my eye on it. But look at that late day breakout right there. Sam, remember we were talking about late day breakouts? Right there over that little 123 would have been perfecto. So in any event, the reason this is stupidity land again, as I affectionately call it, as this roaring kitty said, oh, I'm going to go on YouTube today at noon and talk about it. Oh, okay, so let me double your fair market value. Just The psychology of traders is just mind-boggling to me. Tilius, I think, had earnings, but gapping down. And AVO. Now, if this one weren't gapping up so much, this would be, a 30-minute high idea. I think that had earnings too. Expand it. Well, I think you mean make it smaller. Because, is that what you mean? Yeah, there. All right, Jill. Jill had earnings. That's a 30-minute low. Zero DTE fall spread. Path, possible bear cat bounce. Dead cat bounce. Let me set an alarm 12:30, but unless you get a nice potent shock reversal, that's just a dead cat bounce. Even though I personally have never seen a dead cat bounce. I've seen a cat get thrown out of the window and walk away, but I haven't seen a dead cat bounce. All right, Sam, this is Sam's bull 1, 2, 3, but I have an alarm up here, but it's gapping down, so that's not going to trigger. Dunking. Let's say that's a better bounce candidate. Yesterday though, because you had a little downside shakeout, 3-bar turn, and then a nice closing engulfing breakout bar. That would have been a day trade yesterday, but now that I'm looking at this 15-minute chart, it would have been very difficult to get on board. SPT, another, slow grinder, So if that's your bag, baby. Hood closing breakout. We are core long this daily, weekly, monthly. They bought something yesterday, Bit Farms or Bit something or other. And I don't know if that's what got the excitement going. Oh, charter level alarm. Yuck, 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 yuck. We did a put spread on that yesterday. We did the 270s, so we still have a lot of room. But buy setup, topping tail, 100% greater than 100% retracement. It's an early alarm. It's not stopping, but he's on probation. Run. We have a put spread with a nice open profit. Let's move stop 5-minute low because I had tightened the stop under the week's low. Yeah, I'm in this with 2 different strikes. Tick negative 1400. All right, so Don, I'm short both the 30s and the 29s. I did 2 different sets of them. So I'm going to try to close my 30s right now for a dime. It's not killing me because of the spreads. That's why. And I sold them for 45. So let me try to get out at 15 just to be done with it, but it's the stupid spreads. Yeah, I'm still not getting out because of the spreads. And then the 29s, let me see what the midpoint is. 29s are 10 cents, and we sold them for 20. I'm gonna bid 5 cents, even though those should be fine. 29s. All right, back to run. Oh, actually, we got Well, we got out of a run yesterday, I see. It said take money at a nickel.